I found a 1-minute scalping strategy that's so consistent, so powerful that I'll be using it for the rest of my trading career. This is the hybrid super scalping strategy, and it just made me $3,000 in less than 3 minutes. And it's the same strategy that I just back tested to have a 76% win rate. Today, I'm going to break it down step by step for you so that you understand exactly how it works and why I'll personally never need another scalping strategy. Then we're also going to go over 2 weeks worth of trades using just this strategy, including the wins, the losses, and the profits. Let's get into this. All right, so here we are on the charts. As you see in front of you, this strategy is a simple 6-step checklist that I've used for the past 2 years to be able to utilize this scalping strategy to print money. I'm going to break down the checklist. We're going to run through the checklist really quickly. Then I'm going to show you what all this even looks like on the chart. I'm going to show you guys a bunch of examples of it so you guys know exactly what I'm looking for, the A+ versions of this strategy and ones that I avoid. And as I mentioned before, we're going to go over some data. We're going to go over what the past 2 weeks looked like just trading this specific strategy. So with that being said, let's hop into this checklist. So the first step is our chart setup. There are 2 main things that we need to have on our chart. We need to be on Heikin-Ashi candles. We cannot use regular candlesticks for this. We need to use Heikin-Ashi candlesticks. I'll show you how to do that in a second. Then we also need one indicator. That indicator is called the EMA. And we have to change the settings, go into it, and change it to 100 EMA. But as I mentioned, I'll show you guys all that in a second. Now, the next step is to look for market structure. We're using the EMA to tell us basically when we're going to take buys versus when we're going to take sells. So when we get the EMA on our chart, and as I mentioned, I'm going to show you guys examples of this, we're only looking to take buys if price is above the EMA. And then we're only looking to take sells if price is below the EMA. And in order for me to actually look for buys above the EMA or sells below the EMA, we have to have made market structure above/below the EMA. And I'll show you guys what that looks like and why that is extremely important. Now, this strategy, just to clarify, is a pullback strategy, meaning price never just goes straight up or straight down. Price goes up, down a little bit, up, down a little bit, up, down a little bit, and then vice versa. Price will go down, up a little bit, down, up a little bit, down, up a little bit. We are catching price right at this turning point before it continues its big move back to the upside if we're looking for buys. Same thing vice versa when it comes for sales. We know price is going down. We're catching it on these small pullbacks up right before it reverses to then continue going to the downside. So that's important because step 3, we need to wait for a clean pullback. We need to wait for this pullback to happen. We need to wait for this pullback to happen. I just drew a whole bunch of lines on here, but we need to wait for this pullback to happen. We need to wait for this pullback to happen, this pullback, and this pullback. That's why it says on here that we need to see a clean pullback. And that simply means at least 2 clean opposite color candlesticks in the pullback direction. And clean means no wicks on the top if looking for buys, or no wicks on the bottom if we are looking for sells. As I mentioned, I'll show you guys examples of all this on the chart in a second here. Now, entries. This is why we're going to enter. We're going to enter based off of a high volume doji candlestick, and we're going to do that as soon as that candlestick closes. Keep in mind, this is all done on a 1-minute time frame. This strategy can be used on any pair. My favorite pairs to personally trade it with is NQ, ES, and YM. There are people that trade in gold as well. If you trade on a Forex broker, you can trade other currencies as well. It's just my personal favorites to trade it on is going to be NQ, ES, and YM. But it works basically on every single instrument that you want to trade. But as I was saying, the entry signal that we're looking for is a high volume doji candlestick as soon as that 1-minute doji candlestick closes. The cool thing about this strategy is I don't need to go to any other time frame. I'm only looking on the 1-minute time frame. I'm not looking on the 15-minute. I'm not doing top-down analysis. I'm not doing any of that. I'm simply staying on the 1-minute time frame, being patient for all these 6 things to align, and I'm doing that and taking the trade, and it is printing me money. So we're looking for those high volume doji candlesticks, and we're entering on the candle. It has to be a doji. If you don't know what a doji candlestick looks like, I'm going to show you it on the charts. But in simple, it's just a candlestick that has a small, skinny body, something like this, with long wicks on the top and long wicks on the bottom. Like I said, I'll show you guys examples of this on the chart here in a second because that drawing was absolutely horrible. But once we get our doji candlestick, it needs to not just be a doji. It needs to be high volume, as I've mentioned about 30 times now. And a quick way of seeing if a doji candlestick is high volume or not, if you look at the size of the candlestick itself, if it is bigger than the candlestick before it or the candlestick before that one, that is what I consider a high volume doji candlestick. Now, I prefer if the color of the doji candlestick matches the trade direction. So like if I'm looking for buys, I'd prefer that the doji is green, but if it's red, that won't stop me from taking the trade. I just prefer it that way. Now, the stop loss and take profit is very, very simple. If we entered for a sell, we're placing the stop loss above the doji of the candlestick that we entered on. We're placing it above the highest wick. Now, if we entered for a buy, we're placing the stop loss below the doji that we entered on, below the wick of the doji that we entered on. And our take profit is we're always going for a 1-to-1 minimum. Now, you can go higher and hold this higher. There have been data that I have used to test to holding it to a 2-to-1 or a 3-to-1. But just know that if you hold it for longer than a 1-to-1, the win rate is going to drop down. It's not going to drop significantly, but it's not going to be around that 75% win rate anymore. It could drop down to 65, or if you're holding for a 3-to-1, it could drop down to about 50s or high 40s. So just keep that in mind. But every single time we're going for at least a 1-to-1 risk to reward ratio. And I'll show you exactly how to do that on your charts. But that's all the steps. Like I said, we're setting up our charts. We're waiting for market structure, waiting for that pullback. We're waiting for our entry. We're entering. Stop loss is already predetermined. Take profit is already predetermined. This is a strategy that I don't have to think about. I'm just following a simple system that's been proven over the past few years. Now let's show you guys exactly how to do this. So the first step is to go on Heikin Ashi candlesticks and set up our charts. And how you do that is up here in the top left corner or whatever platform you're using. You'll just switch your bar style from candles to Heikin Ashi candles right here. And I'll show you guys what that looks like on the chart here in a second. But let's set up our indicator. All you're doing is going to indicators right here, and you're going to type in EMA. You're going to see moving average exponential pop up. You just want to press that. Now on TradingView, you're going to see like a drop down here that shows all your indicators. As you see, EMA 9 close is right here. If you press this little gear icon and go to settings, we need to change this to a 100 EMA indicator. By default, it's at a 9. So if you just take this backspace and turn this to 100, it's now at a 100 indicator. And I personally like changing the color of it from blue to white. That's just a personal preference. You can do whatever you want. That doesn't really matter, but we're not changing anything else. We're only changing the length to 100. And we'll just press OK. So now we have our chart set up correctly. We have our Heikin Ashi candlesticks and we have our 100 EMA. Now let's look at the chart, right? These are 2 examples that we're going to go over in a second, but I just want you guys to see exactly what we're looking at here. So we see we're on Heikin Ashi candlesticks. Regular candlesticks look like this. Heikin Ashi candlesticks look like this. Now you'll notice that we have this white line. That white line is our EMA that we just put on the chart. Now if we go to step 2 in our checklist, we need to have market structure above the EMA if we're looking for buys, or below the EMA if we are looking for sells. So as you see, all these candlesticks are above the white line. We're holding above the white line here. So what does that mean? We're only looking for buy opportunities. So now we know we're not looking for sales. We're only looking for buys. Now the next step is to wait for a clean pullback. So you need at least 2 clean opposite color candles. So we know opposite to us looking for buys, we need opposite color candlesticks of that, which is sell candlesticks. As you see, there's multiple times where we've had price bought up, we've had sell candlesticks. Price bought up, we've had sell candlesticks again. So we're making market structure above the EMA. So that's checked off our list as well. Everything's lining up right now. Now, the next thing is we're not just looking for a pullback. We need clean candlestick pullbacks. I told you guys that means if you're looking for buys, which I'm looking for buys, I need clean pullbacks of sell candlesticks, but they have to be clean, which means no wicks at the top. As you see, these candlesticks right here have no wicks on the top. You'll see some of these candlesticks have wicks on the top, wicks on the bottom, wicks on the top, wicks on the bottom. We want to see a pullback with at least 2 clean candlesticks. In this instance, as you see, we actually have 3, 1, 2, 3 that have no wicks on the top. So that's another great sign. Now we have all these things checked off. We're simply just waiting for our entry signal, which is that high volume doji. Now I told you guys I'd show you exactly what a doji looks like. If we look right here, this is a doji candlestick. Let me turn this off. This is a doji candlestick. We have a small skinny body with long wicks on the top and long wicks on the bottom. They don't have to be completely equal as far as the length of the wicks, but we want them to be as close as possible. Like this isn't considered a doji. We have a long wick at the top and barely any wick on the bottom. This isn't a doji. This is a doji. This is a doji. This is a doji right here. There's a doji right here. And the reason why we wait for a doji is because doji candlesticks most of the time mean that price is going to reverse in the direction that it was going. We can see a bunch of examples of this. Price was buying up here. We had a doji and price started selling down. Price started selling down here. We got a doji. Price started going up. Price was selling down here. We got another doji and price started going up. It just most of the time signifies that price is about to reverse in the direction that it was going. And remember, this strategy is all about pullbacks. We're looking at price that's going up already, that went down a little bit, and we're kind of trying to catch the trade before it starts going on that big uptrend once again. And the best way to do that is finding those high volume doji candlesticks. So we found a high volume doji candlestick. I told you guys the candlestick has to be bigger than the candlestick before it or the candlestick before that one. If we draw a box around this doji right here and drag it over to here, you see it is not bigger than the candlestick before it, but the candlestick before that one, it is bigger than it. Basically the same exact size, which is perfectly fine. So once we see that, then we'd enter into the trade as soon as this candlestick closes. We would take our long or our short position tool. So in this instance, since we're looking for buys, we're going to take our long position tool. You're going to draw it at the top of the wick since we're looking for buys. And you're going to drag your stop loss. Remember, we're putting our stop loss below the wick of the entry candlestick that we entered on if we're in buys. This would be vice versa if we were looking for sells. If we were looking for sells, we'd enter right here. Stop loss would be above the candlestick that we entered on. Imagine this is the doji that we were entering on. And then we're always just dragging our take profit level until this risk/reward ratio says at least a 1.00. In this instance, it says a 1.05, which is close enough. But this is an actual trade. Remember, we're not taking sells when we're above the EMA. But we entered buys right here. We have our stop loss right below here. And then we're dragging this until it says a 1 next to the risk to reward ratio. And as you see, it did it. And this trade hit beautifully within a matter of 6 minutes. Now, we have multiple examples of this because I want to make sure that you guys fully understand exactly what I'm looking for and exactly what I'm looking at for this strategy. We literally had another setup the same exact day, just a few minutes later. So we're on the 1 minute time frame. All these 1 minute candlesticks, we had our clean pullback to the upside and clean pullback to the downside. We had at least 2 clean candlestick pullback to the downside. And then we had our doji candlestick. This doji candlestick is obviously bigger than these 2 candlesticks. We entered right here as soon as the candlestick closed. Always draw your zone right at the top of the wick. Don't draw it on the body because with Heikin-Ashi candlesticks, the body of the candlestick is not where price is at. That's the average of price where price has been. So to be safe, to make sure you're always in that 1-to-1, draw your box right here. But what you have to realize is that when you press buy, when this candlestick closes, price could be right here. So you could have technically got an entry right here, which only works in your favor because that technically means with you having the same drawing that you have with going for a 1-to-1, but your entry was down here, you actually were really getting a 1.56 to 1 risk to reward ratio. But we always want to just draw it just like this. So we're having at least a 1-to-1 risk to reward ratio. Same thing with the stop loss below the candlestick that we entered on, going for a 1-to-1. This trade actually ended up hitting in 4 minutes. So super fast trade as well, in and out. And you can kind of see why this strategy for me is really all I need if I'm scalping. Now, these same 2 trades were actually taken inside of my inner circle, but they actually held them a little bit longer. They held them to that 2-to-1. So we were able to make obviously a lot more money, not just going for that 1-to-1. Now, if you don't know what my inner circle is, it is where you can not only just trade live with me every single day and come on our live calls where I don't only show you my exact entries and exits for my trades, but I also break down exactly why I'm entering into the trade so you can learn how to do it for yourself and replicate it for yourself. You also get access to all of my educational content, the content that would form you and change you into the same trader that I am, the type of trader that is able to make 5, 6 figures every single month with day trading. You also get access to 4 other profitable coaches that give you their exact entries and exits on all of their trades. These are verified traders, not just random people that I brought onto the team. I've only brought people who are extremely profitable and that are extremely helpful on helping you become as profitable as possible. We also have a dedicated trading psychologist, because if you've been in the trading game long enough, you probably know that psychology is the hardest part and the most crucial part if you want to be a consistently profitable trader. So in the inner circle, you get access to our dedicated trading psychologist that will help you master the mental game of trading. You get all that plus a lot more. I can't name it all off right now. We'd be here for freaking hours, but it's really only for serious traders, people who want to take trading serious, not people who want to make a couple $100s every month, more so people that want to make 4, 5, even 6 figures every single month with day trading. Now, spots are extremely limited, and I'm not just saying that like everybody else says it on YouTube. If you go to any of my YouTube comments, you're always going to see people saying that the spots are full or when am I opening up more spots. But for this video, I will open up some more spots. So hit the link inside the description down below, but only if you are a serious trader. If you're only trying to make a couple $100, it might not be for you. But if you're someone who wants to take this serious to be able to generate consistent income, no matter if you're a complete beginner, you're an advanced trader, if you're already profitable but you want to make more money and learn how to leverage to make more money, I would suggest you hit the link inside the description of this video right now to have the opportunity to join my inner circle. Now let's hop into some sell opportunities so you guys can see some examples of sells versus just seeing buying opportunities. I just want to make sure you guys fully understand how I trade this strategy and how this strategy literally prints me money and will continue to print me money as long as I use it to scalp. All right, so here we are on another example. I want you guys to see, before I draw it on the charts, if you guys can see exactly where I would have entered at, where's the entry at? Because right now we're on the 1 minute time frame. We're on our Heikin-Ashi candlesticks. We're below the EMA. We have made market structure already, which means price has came below the EMA. We've had a pullback already, right? So we already know we can start looking for sells. So where would I have entered right in this chart? Right here. We had a pullback right up here. We had at least 2 clean candlesticks. We see we have 1, 2, 3 clean candlesticks. I don't count this third one because, as you see, there's a little tiny wick on the bottom there, but we had our clean pullback, and then we had a high volume doji candlestick. If you look at this doji candlestick, it is bigger than the candlestick before it and the candlestick before that one. So that is a high volume doji candlestick. As I mentioned, I'd rather the color of the candlestick be in the direction I'm looking to take a trade in. So I'd rather this doji candlestick be red, but I'm not opposed to it being green. I just feel a little bit more confident. But in this instance, it is green. So we would have entered for a sell right here. We would have dragged our stop loss right above that candlestick, and we would have dragged our take profit until this said a 1-to-1 risk to reward ratio. So we'll drag it, and it hit a 1-to-1 risk to reward ratio. As you see, this trade ended up hitting in 6 minutes. We would have been in and out this trade. Now I want you guys to look over here, and I want to explain to you guys why I wouldn't have taken any of the trades here, any of the dojis that we saw here. So first of all, this first pullback, everything's checking out. We're below the EMA. We have the market structure below the EMA. We have at least 2 clean candlesticks to the upside because we're looking for sells, remember? So we have at least 2. We have 1, 2, 3, 4 clean candlesticks to the upside. But then we got this candlestick. As I mentioned to you guys, we need a doji candlestick. This one, I believe it's bigger. This candlestick is bigger than the candlestick before it. Oh, it's not even bigger than the candlestick before it or the candlestick before that one. So we wouldn't have even taken this because this isn't a high volume doji candlestick. But in my books, it's also not even, it's barely a doji candlestick. We have the long wick on the bottom, but on the top, we have a really, really small wick, which to me is not a doji candlestick. So I would not have taken this trade. Now, the next one over here, we had a 1 candlestick pullback, and then we had a huge doji. But we can't enter this setup because even though we had a high volume doji candlestick, we didn't have a clean pullback of at least 2 candlesticks. As you see, we only have 1, right? And then obviously, as you see right here, we have a small doji, so none of these would have given us a valid entry. The only valid entry is right here. And this trade, if we had been patient and waited for it, would have allowed us to actually win this trade in, like I showed you guys, just a few minutes. All right, so here we are on another example. We're below the EMA. Let's see if you guys can see exactly where we'd have entered on this setup. We're below the EMA. We made market structure already. Here, we had our clean pullback of at least 2 candlesticks. And then we got our high volume doji candlestick right here. We would have entered for sell right here. stops above the swing high right here. And then we would have went for a 1-to-1 take profit in this trade. As you see, just following those same exact principles that we just went over, the 6-step checklist would have made us a profit within a matter of 6 minutes. You can't get any better than that. Now, we've went over a few buy setups and a few sell setups, so you guys know exactly what I'm looking for when I'm trading this strategy. Now I'm going to go through 2 weeks worth of data that'll show you guys exactly how this strategy performed over the past 2 weeks in September. So here we are on the data. Keep in mind, this account started with $10,000 in it. And as you see, we were able to make a total profit of $14,074.06, bringing the account balance up to $24,074. Now, to get this data, I simply, every single trade I took, I only used 5 contracts and I traded NQ only. This is me just trading one pair, trading 5 contracts every single time I enter the trade and trading this one strategy. As you see, the total P&L was $14K after the end of 2 weeks. The win rate came out to 76.19%, meaning I won 76% of the trades that I took. As you see, I took 21 trades. And keep in mind, I only went for a 1-to-1. I did not hold for any 2-to-1s, 3-to-1s, nothing. This was always going for a 1-to-1 risk to reward ratio. Now, keep in mind, just because I got these results does not mean that you'll get these results or anybody else will get these results. This is just based off of previous data that I have gotten using this strategy. But as you see here, we had 21 trades, 16 wins, 5 losses. Most of the time we were taking 1 to 3 trades per day. I didn't take any more than 3 trades in one day. No matter if there was more opportunities, I just capped it out at 3 because that's my trading plan. I only take max 3 trades per day. And then as you see here, the average RR, which is risk to reward, is actually 1.43. As I mentioned to you guys on the charts with Heikin-Ashi candlesticks, we're putting our entry at the tip of the wick, which is basically the furthest place that price could be. But on these candlesticks, when we actually entered it, because remember, we're entering as soon as price closes, price could have closed right here, right? Which then, if we had our entry, no matter what, this was going to be a 1.9-to-1 risk to reward ratio. So you're actually making more money just going for that 1-to-1 using Heikin-Ashi candlesticks because, like I said, price doesn't actually close exactly where the body of the candlestick is. So that's why this is showing a higher than a 1.4, or sorry, higher than a 1-to-1 risk to reward ratio on average. Now, this has a couple more data on it. We went over majority of the data. You can see the total winners. The average win is 9%. The average loss, 10%. We have our win rate. We have our total trades. You can look on the calendar here. We only had 1 losing day using this strategy, but it's just the past 2 weeks, starting from September 1st all the way up to September 15. Most of the time, as you see, we are winning majority of our trades. I did take 4 trades on these 2 days. And then we scroll down, you can actually see the average trades per day is 2.67. Average trades per week is 7, which comes out to really about 1 trade per day. Keep in mind, we're only taking one strategy or one setup, and we're only trading one strategy, and we're only trading on one ticker, which was NQ, as I mentioned. But this is the results that we got. And as you see, this strategy absolutely prints for me every single time I use it, and hence the reason why it's the only scalping strategy I will ever use for the rest of my life. I don't need anything else. Now, the main way I've been able to find success with this strategy, and thousands of other students of mine have been able to find success with this strategy, is by doing one thing. You have to trade this strategy exactly how I just went over it. I've tested this tens of different variations. This is data off of 2 years worth of data, actually more, because I've back tested this a ridiculous amount of time, and then in the live markets about 2 years. So I've tested a bunch of different variations. I've tested not doing the high volume. I've tested not doing this, not doing that, and how I've formulated now and how the system is built now is the best variation that I've been able to create. So that's why it's important that you follow the system, not your feelings. I don't care what you see. I don't care what you feel like. Stay consistent with following the strategy. And just like it's printed me money, it can also help you start becoming a consistently profitable trader. Now, I'll be honest with you, I've tested dozens of strategies over the years, but the hybrid super scalping strategy is the first one that actually feels like home. It's simple, it's consistent, and it's powerful enough for me to use, like I said, for the rest of my life. Now, having the perfect execution with this strategy is extremely important. And that's why inside of my inner circle, we trade the same same exact setup called out live with the entries, the exits in real time, so you can see exactly how it plays out in the markets. So as I mentioned before, if you're serious about trading and you want that mentorship and to be able to trade alongside me and 4 other profitable coaches, hit the link inside the description down below. Now, once you've got this strategy down, honestly, your next step is learning how to leverage it. And you can leverage it using funded accounts. You don't need to have hundreds of thousands of dollars inside of your own account. You can just use other people's money. That's why I made this video right here. I show you how to take this same exact strategy and a couple $100s and turn that into consistent 5 figures every single month. So if that's interesting to you, hit this video right here. I'll see you there.